It's a lot of fun.
Well, good morning, everyone. Thank you for joining us for another edition of our weekly real estate backstory, where we try and expose the soft underbelly of the real estate world. So, at least in the Atlanta area here, kind of thing. So, we kind of wanted to kind of jump in this week, and we have all kinds of cool things to share with you. So, we are going to jump right in here, and we're going to talk about kind of what we're seeing happen in the market, and we're kind of calling it shift. And so. Yeah, because we are seeing the market start to shift. Now, that doesn't mean that this is a terrible thing. It doesn't mean that we need to go running for the hills, nothing like that. But we are seeing a shift in the market. Yes, shift. So, there's new data from the Harris poll that came out. And so 84% of Americans are planning to cut back on spending. Now, the vast majority of that's going to be gas prices, groceries, that kind of stuff, the normal inflationary things. But we're seeing where that has moved over into housing. And so we kind of want to jump off and kind of show you some of the data that we're looking at. And so this is from last week, and this is from Realtor.com. You can see that we still see a big influx in pricing. So, nationwide, median list prices are running about 16% up over prior year. However, new listings overall are up 4%. And for the week last week, total active listings are 5% higher. New listings are 6% higher. So we're seeing more product come into the market. Now,
well, and the builder also is not releasing an inventory until the sheetrocks are up too. So
I guess the new data is showing that one too.
Really?
Oh yeah,
because I was told that one of my agents told me that they're not releasing any data until then.
Well, I'll show you some builder stuff here in just a minute. So I've seen that one. Ming hasn't seen that one, so I'll share that one with you here in a second. So basically, we're starting to see a lot more inventory out there right now. And so as that inventory kind of jumps into our market, that is going to affect our marketplace. Now, the only caveat I got to say is that this is not that historically different. Okay. Normally we go into the spring market and more properties do come on the market in spring. However, we're trending up even over last year and the year before, just on total number of listings, not on total sales.
And not necessarily on the price neither. The price is increasing slightly, but it's not anywhere near pre-pandemic.
Yeah, we're actually seeing, we're here in Georgia, our price point is down into the single digits, which is still high. We're still running 8.5%, 9% over prior year. Nationwide, it's higher than that. This is what monthly supply of inventory has been looking in the United States. And you can kind of see that on a national, this is going back to 1965, where you can see what kind of supply and demand issues really are. And so when you look at that scale, it doesn't really look that bad. But when you break that down and kind of see what's really happening with inventory, you can see the inventory really is starting to move up. And so now that means that we're looking at a more balanced market. Now, does it mean it's not going to still be a seller's market? No, I think it's still going to be a seller's market. We have way more demand. We're not even close to having enough inventory. Yeah, it's always
price point.
We're going to still see a lot of pressure. Anything under 300 really is going to feel a lot of pressure on it still. We believe that we'll start seeing more inventory on higher end price points here, and we'll just kind of share kind of what we're seeing. And
to back you up on the higher end price, I use a photographer, and he told me that lately he has received a lot of job with high-end, larger square footage home. And so expect that inventory to come online.
Yeah, we're starting to see it right now. Now, you just mentioned earlier what's happening with new homes. This is our new home monthly inventory. Now, this is national data, and there are places around the U.S. that are having where they actually are starting to have standing inventory. And so you can see that as overall countrywide, throughout the U.S., inventory really is increasing. And so the number of new construction properties has been increasing. We are seeing more, and there's construction going on a lot everywhere right now.
And with the spike of the availability too, I can tell you part of the reason why that is because a lot of builder at one point was having a hard time getting permits.
Yeah.
And so they were hesitant in putting, pre-sale the property because permitting may take anywhere from 90, sometimes 120 days just to obtain.
Yeah.
So now they're releasing what they call the lot as soon as the sheetrock is up. Typically, that would be a less than 2 to 3 months
something like that.
to finish out.
Well, I'm with you on that. Overall, home buyer competition seems to be tapering down. This is from Redfin, and so Redfin releases a lot of their internal data as well, and you can see that what has kind of gone for the last kind of 3 months. And so this is in the Atlanta area. You can see that the number of properties that have faced competition, for Redfin is dropping, kind of thing. You can see what the competition was back in April 2021. You can see what it was last month. You can see what it was, this month, this year, kind of thing. And so we're seeing where the number of properties with competitive offers, a number of offers on properties, things like that, is paring down. Now, that being said, doesn't mean that housing is crashing. We don't mean that at all. What we want you to understand is there is a shift going on, and so please, understand
educate your seller.
Well, educate yourself too.
Yeah, and also your buyer.
Yep.
And there are still some inventory that is more above the regular ones in the subdivision. Those are always going to have multiple offers.
Now, also, you can see what is going on with the second home. Wow. So for second home purchases through the pandemic, second home purchases have just blown up. I mean, like massive, shot up big time. Well, ever since interest rates has really kicked in, we have seen where second home sales have dropped. I don't mean slightly, I mean drastically. The blue line represents all single family homes. The red line represents second homes, kind of thing. And so that second home market drove some of the demand that we had over the last 2 years. That demand has really, really diminished now. So that is another reason why we're going to start seeing more inventory.
Interest rate plays a big part of buying power and what they want to do in investment.
Yeah. So existing home sales retracted 2.4% in April, kind of thing. Now we are going on 3 straight months where sales are down under last year. Now this is just the number of sales. This isn't volume, that kind of stuff, and this isn't property value. This is just the number of sales are down 2.5%.
He's talking about units versus sale price.
Yes, and we have to understand that when our consumers, when our clients talk about how's the home market, they're talking about property values. They're not talking about the numbers of sales. So we need to understand that we speak a different language a lot of times than our buyers and sellers necessarily will.
So this is reference to units, not necessarily the sale price.
Right. Now, at the same time, we're seeing that remote work is making homes more expensive. There is an uptick in remote work right now. The employees have a lot more power than they've had in the past because it's such a competitive job market. That being said, employers are having to be a lot more flexible about letting folks be able to work from home and, be able to let folks live kind of where they want to, that kind of stuff. And so therefore, 42% of American employees are working from home. So almost 43%, like that's a pretty drastic number. We're approaching half of the US workforce is working at home. You can see why there's still heavy demand on properties, and there's going to be heavy demand in areas that have good value. And let's just face it, here in Georgia, we're in really good shape when it comes to that, especially when you compare us to, the more people come to us from New York than from any other state, kind of thing, because we are good value. We have much lower taxes, things like that than several other states. So our home price forecast. So, we've been talking about home pricing. And we've been running up in, like nationwide, and these are national numbers here, been running around 16%. Here in Georgia, we're running somewhere in that 8 to 9%. And so this is what all the big boys are predicting out for the rest of 2022. So Fannie's at 10.5, Freddie's at 10.5, CoreLogic's at 10, National Association of Realtors at 8, all the way down to Mortgage Bankers Association is down at 6. You can see that the average for everybody is right at 9%. And so we're looking at home price appreciation that is going to keep prices aren't dropping, I guess is what I'm
It's
saying.
not dropping, but it's not climbing as quickly as it was the last 2 years.
And that's going to be fueled by the additional inventory and by the reduction in demand. So we are going to be seeing demand slow. We're going to be seeing inventory increase, but we're not looking at prices drop. Okay. And so that's the thing when folks are like, is the housing market going to crash and this kind of stuff? It's not. We're not looking at properties dropping. Now, for us in the real estate world, what we're looking at is existing home sales. And you can see kind of what's happened for the last 3 years in just the number of sales. And you can see that, in 2020, it was pretty good. And then 2021, it shot up a little bit better. But we've been seeing where 2022 is tapering down every month under last year. And we expect to see that. I expect that home sales are down. Just the number of sales is somewhere down in the 9 to 10% less number of sales throughout the course of the year. And so we need to be ready for that. And you have to look at that. We're going to end up with about a 9% property value increase and somewhere around a 9% reduction in the number of sales. So net out for the year is probably going to be about a wash for the vast majority of agents. You should do less transactions, but you should do more per transaction. Now, that being said, we all know inflation is going on, so you don't want your income to drop, but we have to be looking at things are going through a shift. And so anytime that there is a shift in our marketplace, if we are not making adjustments to our business, then you are going to get run over by this shift.
Absolutely.
So we have to be ready for that. Now, interest rates this past week, interest rates dropped a little bit, which is a nice sign. They're at 5.25. They were at 5.3 last week, that kind of thing. And so we are seeing where that is more moderating. And we're really personally not expecting huge increases in mortgage rates throughout the rest of the year. They may inch up a little bit more.
Fluctuate back and forth.
Yeah, they're going to fluctuate for sure, especially with market conditions. But we expect it's going to moderate somewhere around there. A lot of the mortgage companies have already taken big jumps in anticipation of what's going on, and so they've already built in some padding for
pretty much
as the 10-year treasury goes up and that kind of thing. So overall housing payments have risen by this much on average for the nation. Housing payments have risen by 51%. Now that should make your head spin. Want to know something really crazy? We're actually below the national average. Okay, we're at 43%, which I'm not saying is great, but it is better.
Better
when you compare it. Would you want to be in Miami?
We're
83%.
83%, and yeah.
So you can see where these big markets and what's really kind of happened in a lot of markets as far as the mortgage payments. Now the buyers today. And we need to be very helpful with our buyers. What's going on? I really do expect that we're going to be able to start seeing a lot more down payment programs, and sellers will be a lot more open to down payment programs. Those are going to become a really big deal.
I'm seeing some FHA coming through in the
a lot more.
So, and VAs as well. So,
but there's a new study out and said that 56% of mortgage borrowers didn't compare rates, and over half or almost half of those who did saved money. This is going to be a big deal. And this is going to be something where in the past you may have said, talk to my lender. Well, you need to talk to your lender for sure. I need you to talk to multiples of my lenders. I need you to talk to this lender and this lender and this lender.
Well,
kind of thing.
The trap on that too, sometimes you might want to be careful and make sure whoever lender you talk to are reputable, because the lender can make you or break you.
Yep.
And if you talk to some folks that doesn't really operate in Georgia, but got their license here in Georgia and don't understand the Georgia mortgage.
We definitely need to have a list of lenders, right? But we need to have lenders that we can recommend, and we need to have more than one. Is what I'm really saying. And these need, we're big fans of local lenders that you can look in the eye like, don't you mess up my loan. But at the same time, we need to be able to offer our consumers choices. Right now, 56, almost 2/3 of the borrowers are only shopping one rate. And when you look at that, you can see that, when who offered the lowest rate when they went through multiple, almost half, 46% of the time, someone that wasn't their initial person had a lower rate. And so we do want our clients to be shopping lenders right now. Like Ming said, definitely making sure that they're shopping reputable lenders who can get the deal done are very important, but we need to really be recommending multiple great lenders out there to our clients. Now, a third of the home buyers also said that mortgage rates impacted their home buying time frame. You want to know, now about 60 said, about 2/3 said it didn't matter. Increasing rates just didn't matter. However, 23%, actually a quarter of folks, went out and started buying now because they feel that the rates are going up. Only 7%, went later. So what's interesting is that interest rates have risen, demand has actually increased for about 2/3 of our buyers. It hasn't impacted them. For about a quarter of them wanted to go out and buy now, which is really pretty interesting when you figure it'd be the exact opposite way. Now, when do most home buyers meet with a real estate agent? You can see that about half the time they're going to meet with us before they meet with the lender. However, we're seeing a trend here where a third of the time they're meeting with a bank or a lender to talk about how much home they can afford before they meet with us.
Which is a huge blessing, because in the past, it's always been us referring the buyer to a lender, but now we have buyer that comes to us that already been approved.
So good source of leads there. Also, there's a new study by Ojo Labs out there who said, it is now going to be a good time to buy. And so you can see that, and just so you know, we pull this data every month. And so this is actually increasing. More people feel it's a better time to buy now than it was last month and the month before.
Nearly half, not quite.
So, a quarter neither agree or disagree. And then, we've got almost half in there that either strongly agree or agree right now. So we still have a lot of home buyer activity going on in the market. Please don't talk, when you hear me or Ming or any of the talking heads talk about real estate, talk about a shift in real estate and talk about things that are going on. Don't let this convince you that the market's tanking. Don't let them convince you that there aren't buyers and we shouldn't be out here at, the housing market is still strong.
Agents should see some relief, whereas due to the increased inventory and also slight downturn of buyer demands, that the seller will need to start negotiating a little more.
Yeah. Now that kind of leads us into, we've been hearing for what years now, it seems like the market's going to crash. When are REOs? How, what's going on with that? Well, how about we show you some of the numbers here? So this is the share of mortgage loans in forbearance. Guess what? It went down again. The number of properties in forbearance is down another percent. And so you can see that overall, the mortgage rates have really, 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 really been, mortgages in forbearance have really been dropping down to just about nothing. Our foreclosures, and so you can see where the number of foreclosures are, kind of thing, and kind of what's going on. So, the three big areas, that's 2017, 2018, 2019. So you can say, well, there's been the forbearance, the moratoriums and that kind of stuff. True. But look at the number of foreclosures this year, last year, that we are having since the moratoriums, and what's going on with that.
It's because, every home has equity because the increase. So therefore, even a seller that couldn't sell before is now able to sell with equity.
Yeah, you can see that the average is around 290,000 homes. We're at 38,000. So there's always going to be some level of foreclosure, but it's so drastically low. It's not even out there. Now, when folks leave the forbearance program, what's going on? Well, when they're leaving, about 37% were paid in full. Almost half had workout plans. Only about 18% of folks were still in trouble. Of those who were still in trouble, guess what they have, Ming? Equity. So, that's the thing. We're just not looking at that happen. And so, everyone's been talking about price drops and what happens with this inventory. So this is from CoreLogic, and they are a huge national aggregator of tons of real estate information, real estate data. And so they go through and they analyzed all the different markets around the US and said, how likely what are the odds of prices in your area dropping? And so this is an interactive map. You can find it out there on Fortune, that kind of stuff. But guess what? When you pull up Atlanta and basically all of Georgia, Rome is actually in the middle, but in all of Georgia is pretty much ranked low. The odds of regional home price dropping over the coming year, low. And so again, when you look at, we are going to be looking at interest rates are going to be stabilizing, but they are going to inch up a little bit throughout the course of the year. Home prices are not dropping. Home prices are still going up. And so if you want to buy, is it better to buy now, or is it better to wait when prices continue to go up and interest rates continue to go up?
Well, a lot of
It's still a
people,
good time.
once again, still looking at the downturn market when we have experience in back in 08, 09, and low was at
We're just not in the same
2011.
that place again. You know,
There's a different economy this time because what I'm seeing that is that there's more manufacture being built in US versus overseas. Different state offer
Yep.
different incentives to kind of keep it at home.
now there's a new report out from the National Association of Realtors talking about institutional buyers, iBuyers, and not just iBuyers, but also any institutional buyers out there, and kind of what's been going on. You can see that the institutional buyer share, rose up in 2021. It actually dropped in 2020 when the market tanked. But you can still
I
see
think
that.
that's due to Zillow
Well-
going out of the market too.
Well, it could be that as well. But if you look, it's actually, historically, it's actually on a national basis lower than it has been. Now, it's not that way for us here in Georgia, unfortunately. So you can see that these are the states with the highest number of purchases by institutional buyers. And yay, we're number 2. Now, the only good part is that we're not number 1, right? So Texas at 28% of sales. Here in Georgia, 19% of our sales are bought by institutional buyers. And so you can kind of see that's one of the reasons why we continue to have a lot of demand on our properties. And so that's not going to change, is what I'm saying. And so with demand means that we're going to continue to still see, we're not going to see prices fluctuate. We're not going to or drop as much as some other places around the country, because we still have a lot of demand, and we have a lot of iBuyers and institutional buyers on there, kind of thing. And so you can see what is the change in market share from 2021 to 2020 kind of thing. You see here in Georgia, it's up about 4% over there. And so one other thing that came out from this study found that institutional buyers like to buy where the median are only buying 26% below the average purchase price. I'm sorry, I'm kind of babbling. And what I mean to say is institutional buyers are buying in that first time buyer range. They're buying entry level homes. That's where they're buying. And so when we say, talk about institutional buyers, we're not talking about 400, 500,000. We're talking about 250,000, 200,000, that kind of stuff.
If you think about, it's the lowest price point of homes for the least amount of investment, yet the return on investment is much greater than 10% on most of these properties.
Yeah.
So that's what they're looking at. And that's why they're kind of competing with the first time home buyer as well. And obtaining those homes,
which is going to continue to put a lot of pressure on our entry level buyers moving into the marketplace. It just is. I can't change it, but I do want you to understand kind of what's driving that. Our institutional buyers are buying at the first time home buyer age. Now, what are the 10 things that most institutional buyers are looking for? Okay, and so they're looking for households that grew by 11%. Georgia, check. The number of shared black households is at least 16%. Georgia, check. 30% of households are renters. Georgia, check. 27% of households are millennials. Georgia's right at that same rate in there, kind of thing. Households with a bachelor's degree, check. All these kind of things, Georgia checks off the box in here for. And so we are going to be a hot spot for investors kind of long term. And so we have to understand that when we start looking at and especially when you start hearing national data on what's happening with housing and things like that. And what Ming and I are really kind of expecting is to see a lot more shift in the different price points in our market. So we expect the entry level 250, 275 and below, 300 and below, is going to be extremely fierce going forward. That's just not going to change. Once you get up over that 300 price point, we expect to start seeing more inventory in those areas. Right. And as you can see from from our data below, kind of thing. At the same time, rents are up again. rents have hit a new record right now. And so, the rental market is really kind of jumping out. National Association of Realtors chief economist says he's predicting that the typical U.S. asking rent is going to be $2,000 a month. Okay,
that's a lot of money, y'all.
And that's a lot of mortgage right there. I mean, like seriously, if they're looking at the average median rent in the U.S. being $2,000 is just, to me, astronomical kind of thing. And so for our buyers, is renting a safe haven? No, we're not looking at that being
so a safe haven. Start doing first-time home buyer seminars. Start educating this client. I mean, my philosophy always has been, I need to eat even 6 months or a year down from the road. So, help these clients obtain some wealth by home ownership.
Big deal. So into some of our odds and ends here. What are the most popular platforms kind of thing? So this is for U.S. populations at least 12 years old kind of thing. What's most popular? You can see Facebook's number one. And guess what?
It's Facebook, funny because my kids tell me that that's such an old people platform.
Yeah, but when you look at it, it's actually increasing. It went down a little bit in 2021. It's back up hot and heavy. Instagram continuing to grow. TikTok blowing up kind of thing. Even Pinterest, Twitter, all that kind of stuff. So just so you know, when you're looking at doing, how am I going to reach out? How am I going to engage? Those are the top platforms if you want to get to the most number of people. Now, in commercial real estate, guess what? Top 10 commercial real estate markets, Atlanta falls in there as well. And so that's a good thing for our overall economy. Commercial real estate kind of falls along with a local economy kind of thing. And so you can kind of see that overall, the Atlanta area especially has much stronger
presence.
It's one of the strongest real estate markets in the United States. Now, at the same time, we've got Homebuilder sentiment has dropped to its 2-year low, and that has gone into, it dropped big too. It dropped 8 points last month. And so the inflation, as well as a lot of issues out there, are really leading to home buyer sentiment. Ming was talking about this earlier. We're seeing that where home builders are not putting out a lot of inventory.
Well, they're not doing anything because and most of y'all probably have experienced this, where a contract was written a year ago after about a year worth of building and supply issue and labor issue. And now it's finally finished. And now the builder won't charge a client anywhere from $20,000 up to $60,000 or plus $1,000 due to the demand on lumber and everything else. And so a lot of the builder are not doing any more pre-sales. They're only doing releasing the lot once the sheetrock is in, because at that point they already got their fixed costs in, and they know exactly what their the cost of building that particular model home. Yeah,
the chairman from the National Association of Home Builders says housing is slowing. They can see it in their numbers out there, and so at the same time, the building permits is starting to go down. Building permits declined 3% in April, kind of thing. Single families down 4%, multifamilies only down 1%. I don't like that. I would much rather see multifamily dropping, kind of thing. And so that's going to be one of those things. At the same time, this is kind of what's going on with our building materials, as well as goods and services. Goods as well as services. And so this is what's going on for the builders. So on one hand, I do feel their pain, right? Like the cost issues that they're having, as well as the availability.
It's real. It's not something they just made up.
That's straight up and legit. So we do have to understand that's going on.
Labor is crazy right now for the builders, and everybody demands higher wages. Therefore, we're paying higher price for food and gas at this point.
I want to do a quick shout out for Bill Boyd. Bill, Bill is an agent with Maximum One, and so he shared out this a site called Free Caller Registry kind of thing. And so if you do calls out into a database and that kind of stuff, and we're all seeing where folks, like on my phone, spam, potential spam, that kind of stuff. If you don't want to get listed that way, then this goes in and it ties in with Orion, Haya, and Transaction Network, which is probably the 3 biggest out there. It impacts 200 million US wireless customers kind of thing. And you can go in here and register your phone number on here to say that, I do market for real estate, but I'm not spam kind of thing. And
Right.
so you can go out and register yourself on here, and that will help you show up. So I really do like that, Bill. Thank you for sharing that on
Appreciate it.
Rockstars kind of thing. The Biden administration announced plans trying to ease the burden of housing costs. I'm not political. I'm apolitical. However, I disagree heartily with the president's plans, and I just want to explain why. Because the U.S. the government wants to see things that it does add housing, but it doesn't improve it doesn't improve home ownership.
Right.
There's only one program that they have, and so they want to reward jurisdictions that change land and zoning policies to multifamily. Again, that's going to be tailored much towards investors. And so they want to be able to add new financing mechanisms, in there for manufactured housing as well as multi-unit properties. Again, investors. They want to improve existing federal financing for multifamily development. Investors. Only thing that they have on their plan is that they want to ensure that government owns, basically HUD homes goes to owner occupants. Well, that's already been the case. So, for not that the president is going to listen to me, but like wealth in the United States is tied up in home ownership, and I don't want that we're building wealth for a lot of investors. I want that buyers and sellers. That's where the wealth needs to be. The individual people kind of thing. I want to wrap up this week with a list that we're not on. And I know this might sound weird. And so this is a list of all the metros in the United States with the highest amount of mortgage fraud. And I point this out because we're not on the list.
Thank goodness.
And so during 2006, 2007, 2008, Atlanta, and we had zip codes in Atlanta that had more mortgage fraud than entire states or regions kind of thing, multiple states. We had one zip code that probably had more mortgage fraud in that one zip code than almost anywhere else in all the states combined kind of thing. So mortgage fraud was actually very, very high in the past in Georgia. And so the fact that we don't have any right now, that's a blessing. I'm really glad to see that kind of thing.
So back to in reference to mortgage fraud, some of the mechanism was used where if your house is free and clear of any mortgage, people actually will do a quick claim deed and record and the court clerks the court. And then what happened is when they try to sell a property, guess what? There's a quick claim deed showing that you're no longer an owner of the property. So if you, as an owner, don't think it's a blessing that you're not getting your tax, because that is probably one a good indication that somebody might have quick claim your property to someone else because you're not getting a tax bill. So therefore, always look for that and double check on a yearly basis if your house is free and clear. Yeah.
Now we want to wrap up with what do we have in trading this week? So tomorrow, Ming as well as
Blake
Edge is going to be teaching licensed law for agents and brokers. Now I had it listed as being in person at MSAR. This is a virtual class, and so you can sign up at Metro South Association of Realtors. I'm also going to be teaching code of ethics in our Noonan office tomorrow. On Wednesday here in the McDonough office, I'll be teaching making money with real estate investing. And if you are interested in working with investors and understanding how investing works, please come to that class because it's one of my newest classes. I really like it.
And let me tell you, there's opportunity to be made.
Always. And on Thursday over in West Georgia in our Carrollton office, we have marketing for agents. It's going to be an in-person class. So.
And that is taught by
Discovery Home Inspections kind of thing. And so
and she's actually does
a really great job. Absolutely. So thank you guys. We hope that you guys have a wonderful week. If we can be any kind of service, please call, text, smoke signals.
Once again, before we leave, Alan Richardson, the qualified broker. We forgot to introduce ourselves.
Oh, we did.
And my name is Ming Richardson. I'm the compliance broker for Maximum One Realty and Realtor Partners.
On that note, we're out.
See ya. Have a great month.